Let's talk about VPF or Voluntary Provident Fund today. Joining me is Ketan Das of FinRight. So first of all, how much can you contribute to the Voluntary Provident Fund? And that is up to 100% of your EPF wages. Mind you, this is EPF wages and not your C2C. So this is your basic plus dearness allowance. Your actual C2C might be 3 or 4 times
That's correct.
this amount. In terms of tax deductions, if you're in the old regime, you do get section 80C. In VPF as well, if you've not covered it through the mandatory EPF deduction. And the interest on the VPF is tax free, just like it is on the EPF. Of course, there is a limit. So if your contribution exceeds 2.5 lakh, this is your employee contribution, not your employer. So your mandatory employee contribution plus VPF.
That's correct. So interesting point is all of this is on top of your mandatory 12% of your EPF wages contribution. So combined, your EPF plus VPF contribution should not exceed 1,50,000 if you want to claim that deduction. It should not exceed 2.5 lakhs per annum if you want to get a tax-free interest on that.
Right. And Ketan, in terms of withdrawal, it is the same rules that apply to EPF, right?
Yes, this is not like a savings or a voluntary, whenever you want you can withdraw that money. Same withdrawal rules that apply for EPF will apply for VPF as well.
So you can't take out money whenever you want. It's
That's correct.
Not like a savings bank account.
No, that's correct.
So if you could give some examples of reasons for which you can withdraw from VPF also.
Yeah, so whenever you are withdrawing money for, let's say, under illness, you have a medical emergency, you want to withdraw money from that in that case you get money from VPF as well.
And the same condition applies for tax free. It has to be, you have to have 5 years of service in the EPF.
That's correct. If you have over 5 years of service under EPF, then you get tax free withdrawals. Otherwise, taxes will apply as per your tax slabs.
For EPF and for VPF?
For VPF, yes.
And finally, the comparison?
Yes. So when we talk about ATC deductions, you also have other options such as PPF and NPS. So why choose VPF? Then in that case, you see the interest on VPF is 8.25%. For PPF, it is 7.1%. This also has a 15-year lock-in. For NPS, it is linked to markets. It could be 9%, it could be higher.
Or it could be lower.
That's correct.
So all of these, by the way, are subject to markets in some form or the other. So VPF interest rate, which is also EPF interest rates, depends on the return that the EPFO has got on the corpus. They declare it every year.
Yes, every financial year they declare. This has been 8.25 for the last 2 years.
Right. It fluctuates around 8%, roughly speaking.
Yes.
PPF is reviewed by the government every quarter and tends to follow the overall interest rates in the economy. So it has fluctuated quite a bit. It used to be north of 8%. Now it's on its lowest level probably in history at 7.1%. And NPS is market linked. So it depends on your choice of debt versus equity. The 9% we've assumed here is a conservative assumption that this is what you would have gotten if you mostly opted for the debt component of the NPS. So which one you choose depends on how much risk you want to take, how much you're willing to put up with lock-ins and paperwork, and at least on that criteria, highest amount of paperwork is in VPF.
Yes, you do have to submit one declaration whenever you're opting in for VPF.
Through your HR?
Through your HR, through your employer.
All right.
Yes.
Thank you so much, Ketan.